strategy is identified by a bullish followed by a bearish candlestick that leaves the zone. Okay, so what I mean by that is you have, can you see my cursor?
Yes.
Okay, so you see how you have this green candlestick, which is representative of the bulls, right? Then you follow by a bearish candlestick, which is representative of the bears. Okay, so you
Yes.
have a candlestick followed by a red candlestick, and it left this zone area. Okay, creating lower lows or lower highs. Do you understand what I mean when I say lower lows or lower highs?
Yes.
Okay, so I'm just going to go over a lower low would be a lower red candle than the one that was before it. Okay,
Gotcha.
and a lower high would be a lower green candle than the one that was previous. Okay, so we have a bullish followed by bearish leaving the zone, and immediately I would tell you, once you have identified that, go and get you a horizontal line and put it right there at the base of that candle. Okay, put it at the base of that candle, because the next time, and when you put it at the base of that candle, you look all the way over to the right, it's going to give you a price right here. 1.70702 is the price. So in your MetaTrader 4, you will go in and put, for this order, you go to Euro, New Zealand dollar, right? And you will put in a sell limit. And at what price? You're going to sell at 1.70702. And how would you know how many pips to go for? Well, remember what I told you, according to what time frame you're on, and I'm on a daily time frame. So that tells me that I'm going for at least 75 pips, right?
Okay.
Okay. You following me, or am I losing you?
Okay. I got a little lost when so you put the line where after you see the bullish and the bearish, it leaves the zone, it's creating lower lows. So then you put your line there, and that's how you decide where the price point is. Correct? I just want
Yes.
to make sure. Okay.
Yes, that's
And then you would go 75 pips from that price point from the daily chart.
on a daily.
Okay.
That's why I put my take profit at.
Yes, your take profit. Okay.
Okay.
Now, is there a certain time that you, or a certain session, I say, do you look for these, or are you just doing this all day, or you say, hey, before London, I'm checking this, or what is the best timing?
Okay. So teacups are something that you set up way ahead of time. Okay. So teacups are in all 32 pairs. Okay. So way before the move even happens, you can go and do these. Okay. So you can set these up on Sunday for, the next couple of days. And if they activate and hit, they activate and hit. The only thing that can change a teacup is the news. So be mindful of what pairs you're trading and on what days that they're going to have news events, especially red folder events. Okay?
Gotcha. Okay.
And just stay away from those pairs for that day until after the news.
Okay. Gotcha.
Okay. So, what signifies that the trade's going to get activated? You see this green candle followed by the red candle where I
Yes.
have the curtain?
Yes, I
Okay.
do.
So left the zone and it started to come back, and this one here threw a wick right back to that excuse me, right back to this line.
Mm-hmm.
You saw it?
Yes.
Yes.
That would have put us in the trade. and the trade came all the way down to here. So this is on a daily. So we're going to measure and see, did that come true? So you go get the ruler. We can go from here, the bottom of here, and go straight up. Right on that line. How many did I say it was supposed to get?
75.
How many did it get? Can you
Was
see it?
that 340?
Three,
You can't see it.
yeah, 346 pips.
Oh wow. Okay.
Yeah.
Okay.
Yes, teacups are amazing.
I have to get small.
Teacups are amazing. Okay. So you're only going to take the first and the second teacup that are on a particular line that you actually draw. Okay. Oh, we got more people on. Tavis, what's going on, man?
Hey, it's Travis.
So why I say Tavis? What's up, Travis?
He got the admin account.
Wow, man. Sorry about that. Yeah. So do you all see the amount of pips that was made?
Yes.
Okay. So what I will tell everybody, once you learn how to actually do teacups, is to go ahead and mark up all 32 pairs for teacups and look for these zones. Later on in another class, I'll teach you all how to do advanced and look for advanced teacups, because they don't always look the same way, but they are advanced teacups. You know, in addition to all the other methods that are out there, this is one where you can set it, you know, just make sure news is not happening for that particular pair and then let it run. And then if you're trading on your phone, you can move your stop loss. If it's still going, you can move your stop loss into profit. And that point is a risk-free trade. So let's say that we were going for 75 pips on this daily teacup right here. And this teacup actually ran for 346 pips. So what I would have done if I was on my phone is, the minute it got past 75 and it kept going, I would have put my stop loss maybe, by the time it got to like 100 pips, I probably would put my stop loss at 75 and let it run. And let it run until it ran, you know, I would have kept checking it and then, you know, kept moving my stop loss up closer and closer into profit. You know, so I would have captured most of the move. Another thing that you can do is, if you are on your computer, you can right-click the trade. Once you're in the trade, you can right-click it, and then you can set a trailing stop loss, and it will trail the stop. It will trail the price all the way up, you know, and you can probably capture almost the majority of the move, if not all of the move. And you can do this with each and every pair. Another thing that I would advise someone to do is to download the application called Call Levels. It's an app that you get from either your Google Play Store or your Apple App Store. And what you're able to do is a couple of things. You can set up alerts for when price is actually going to hit this particular price right here to alert you, hey, you're about to get into this trade. So you can go and make sure that the trade is going in your direction or whatever the case is. And if you want to set your parameters at that point, you can go ahead on and set them. Another thing that I would tell you to do is, instead of trying to learn how to count the pips You know, if you don't have a lot of time and you want to basically go and just put in the amount of pips that you need to capture, since these are all sell limits, right? These are all pending order sell limits. So that means you're going to be doing what? Selling, shorting, not going long. You're going to be shorting. So there's the toolbar that's over here. There's a position tool. Can everyone see this right here where I have the cursor circling?
Yes.
Okay, so I would click the little arrow, and what's going to pop up is long position or short position. Okay, so you want to click short position. And when you click the short position, you can put it anywhere on the chart and click it. And when you left click it, this is what's going to come up right here. Okay, and up above that, you're going to see this here, which is the toolbar for this short position tool. Now you want to go to the toolbar and click the little gear right here for the settings. And when you click that, you're going to see another dialog box that opens. It's going to say style, coordinates, and visibility. You want to go to coordinates. And right here it says entry price. You have your stop level with ticks, and you have your profit level with ticks. Now, for the entry price, let's say our entry price was the one that I highlighted right here, 1.70702. Okay, so I would type 1.70702 in that entry price. Okay, now what did I tell you all the stop loss is going to be no matter what? The stop loss is going to be 30 pips. So 30 pips on this does not look like 30. 30 pips on this looks like 300. So you put 30 and add a 0 for the ticks. Okay? That is what 30 pips stop loss looks like. All of your trades for the TEACUP strategy, you put your stop loss at 30 pips. So when you're using this position tool, stop level ticks, you put 300 in this box right here. Now your profit level is going to be determined by what time frame you're on. So you're on a daily. What did I tell you the daily amount of pips is?
Daily is 75.
75. So how would I write 75 here?
Should be 750.
Correct. 75 and a 0 for the ticks. So then I go and press OK. When I press OK, then I come back to the gear, to the settings. It's going to give me right here in this box my stop loss to the number. You see that?
Yes.
And it's also going to give me my take profit to the number. Right there. Do you all see that?
Yes.
Okay. So it makes it real easy peasy, especially if you have a lot of these that you're going to do and you're on the go. You can use the short position tool in order to calculate your exact take profit and stop loss numbers. Okay. And then you can go on about your way. You can do that for each and every one of these. So right here, we had the bullish followed by the bearish leaving the zone. We dropped down for 364 pips, right? Now,
Yes.
we're only going to normally take the first two that come off the zone, okay? So it came back here. We have a bullish followed by a bearish. It left the zone again. Remember, we're going to place another order. So it came back and put us in. And then she dropped. So I'm going to measure this drop right here with the position tool. 396 pips.
Good.
396 pips. Okay. Now, that was the second one. Now, we still have this line, right? We still have this line. Now, look, here it comes back for a third one. This is why we don't get in for a third one. Look what it did. It bust through the line. So you would have been in a severe drawdown. It would have hit your stop loss and took you out. But what did it do? It came up to this line. What line? Hey, I have a bullish followed by a bearish that left the zone back there before. And it came right back to the zone. Remember, these are pending orders that you're putting in. It came right back to the zone. It would have put me in the trade and dropped me down to here. Right? So let's do a measurement on how many pips that is. $274 pips. Y'all see that?
Yes.
Okay. And now here's the second one that's coming off of that line. Right here. It would have put you in. Let's see how many. This one dropped here for, if you would have took it here, 632 pips. Y'all see that?
Yep.
Yes.
All we were expecting to get from this was 75. But if you would have put the trailing stop loss on, or if you've been watching, watching the trade and then just moving up your stop loss further and further into profit, 632 pips. Now, mind you, each one of these candlesticks are days. Okay, so it would have took you some days to get here, but is it okay that it went that way?
Absolutely.
Okay. Or if you would have took it a little further down, let's see what those pips are. What's happening with this thing? The whole chart moving. All right.
1, 2, 3.
Oh, I gotta get the tool again. Didn't highlight. Here we go. There we go.
7, 2, 4, 5, 9.
671 pips. Teacups, excuse me, are in every pair. There are 32 pairs that we have. You can mark up teacups and set up these traps way ahead of time. Way ahead of time. These are all pending orders. Teacups, we're only trading what is known as the handle. So let me see if I can grab this. Let me see if I can grab a pencil. Let me see. I can't grab it.
2, 3, 7.
Well, I want you to use your imagination. Here's a teacup. Bullish followed by the bearish, leaving the zone, creating lower highs and lower lows. This here is a lower low. That here is a lower high. Why? Because this green candle is lower than this green candle. This red candle is lower than this red candle, and it continues going downward. She turns around. She comes back through. She busts through. That's not a teacup that I probably would have taken. Because that is the 1, 2, maybe, you know, maybe I would have taken it. We'd have been in some drawdown, but if this drawdown was above 30 pips,
Right.
then you might have, you would have got knocked out. Now I'm not going to tell you what I do, because the broker, when you put in your stop loss, the broker knows exactly where your stop loss is. Have you ever been in a trade and all of a sudden out of nowhere comes a huge wick that comes up and hits your stop loss, and then the trade goes back to the original direction that you were expecting?
Yes.
That was the broker doing that. So when I don't put in a stop loss, I'm not telling you to do that. I'm gonna tell you to always put in your stop loss. You are trading your own account. What I do is something totally separate. Especially if I feel the trade is going in that direction, I will not put on a stop, and so that they can't throw a wick to take me out. And then when the trade is going enough in my direction in profit, and I'm assured that it's not coming back, then I'll put it in my stop loss. And then as it continues to move past where I need it to, I'll bring it more or further into profit. So I want to go over the rules of teacups, okay? Teacups, you're only looking at them on the higher time frames. That is your daily, your 4-hour, and your 1-hour. Teacups are pending orders only. Pending orders only. They are sell limits. Teacups are in every pair. There are 32 pairs here in the regular Forex market. You can look for teacups in all 32 pairs, but only on the higher time frames. On your H1, you're looking for 25 pips. On your H4, you're looking for 50 pips. And on your day 1, your daily, you're looking for at least 75 pips. Now, there are ways to get more pips out of this, and we'll go into it a little bit now, but more as we do more and more classes. One way you can do it from your phone is to bring your stop loss into profit once it has surpassed the amount, but it's still going in that direction. Also, if you're on your phone, on your computer, you can set a trailing stop loss. And later on, we'll show you how to set a trailing stop loss. Okay? Teacups are in every pair. So let's go to a different pair. Let me pick a different pair. Somebody give me a pair they want me to look at. Anybody?
AUDNZD.
AUDNZD. Okay, as you can see, I've been marking this one up.
Yeah, me too.
So I got a lot. I have a lot on here. I got Fibonacci, and we'll go into another time how to draw Fibonacci and how to trade from level to level. Let me take off. Let's see here. We're on the daily Let me see if I
You
see
can go to
anything.
another one that's
See any
clear.
teacups? Can anybody see a teacup?
Okay, hold on. What's this line right here?
Remember, a teacup is a bullish candlestick followed by a bearish candlestick that left the zone.
Yeah, it is
I
one
see
rate
one. Okay.
Oscar, what'd you say?
over the 0.382.
Right here?
Yeah.
Yes, sir. Yes, sir. Okay. So what you do is once you see a bullish followed by a bearish leaving the zone, you go and grab your horizontal line and you go and trap it off. Just like that.
Okay.
So we had a bullish followed by a bearish. It left the zone, came down here, came up, boom, put us in a trade. It put us in a trade. We are on a daily time frame. How many pips are we looking for in this daily?
75.
75. Right, 75. So let's grab our tool over here. Let's see what she did. You could have grabbed it to here, or you could have took that bad boy all the way down here. 547 pips. That's a lot of pips. Understand, if you would have placed 2 orders, you know, with a good lot size, you could be sitting real heavy at 547 pips. Remember, teacups are in every pair. Every pair. So, does anybody see any more teacups? Bullish followed by bearish, leaving the zone.
There's one right prior to the one you just did the pip count for.
Where? Here?
Prior to the one you did the pip count.
Here?
Where you at? No. Go back the other way. No, the other number. It's the same.
Where?
It's just prior to the.
There are teacups all over this page. There are teacups all over here. This is
Hey,
a bullish, bearish, yeah.
So the bullish and bearish, do they have to be a certain size candle?
No, they don't. They just have to leave the zone. Meaning, all right, when I say leave the zone, this is a bullish, this is a bearish, and they're getting lower lows and lower highs. So it left this zone up here right where it was. This marks the zone. They started leaving the zone. So I put a horizontal line here, and so the next time it comes up and hits this zone, I'm in the trade. Now, no matter what time frame I'm on, my stop loss is always 30 pips from this price right here. So you mark it so that you know your entry price. My entry price off of that zone is 1.10509. So 30 pips to the upside of that number is my stop loss. So I would come here and grab this position tool, and I'm going for the short position tool. I can place it anywhere, and then I'm going up here to the gear. I'm grabbing that, and I'm coming down here to the coordinates. I'm going to erase this number here. And then that number I put in was 1.10509. And remember, I'm coming up here. And my stop loss is how many? How many, y'all? Anybody there?
30 pips.
30 pips.
30. So how do I write 30 here?
300.
300, 300. And how many pips am I trying to get off of this one here?
75.
75. So how do I write the 75?
750.
Right. 750. And I go here and I hit OK. I come back here. I hit the gear. This here is my exact number of 75 pips away from that entry point. Right here. Boom. Easy. Real easy. This
So,
right here, yes.
so when you see, if you start to see the trend continue to go down, how do you say you can update it again to keep going?
Okay, so
Or increase your
in here, before it hits your take profit, what you want to do is erase the take profit, and then you want to just pull your stop loss from the 30. You want to pull it actually into profit. So I would pull my stop loss 50 pips into profit. So at least I'm going to get 50 pips, right?
Okay.
Right, so at least I'm going to get 50 pips. If it shoots past my 75, it's going to 80, going to 100. Okay, I'm going to bring my stop loss up to 75 pips, right? And let it run. If it's going to run and do 300, 400 pips, I'm just going to continue to adjust my stop loss to give me the amount of pips I need from this number right here. So if it went 650 pips, and let's say I wanted to put it at 630 pips, what would I put here?
630.
Nope.
You said if you wanted to put it at 630.
630 pips.
6,300.
Oh yeah. Okay.
That's what I would put there. Boom. Remember, you got to always add the 0 for the ticks.
Right.
So it's safe to say that every 10 ticks is a pip.
Yes, it is. Yes, it is. That's why we add the 0 at the end. So this would bring me my number right here of where I would put my stop loss. If that thing was going 650 pips, the more it gets to the end of that move, and this is where it plays into, in your candlesticks, and then later on being able to draw the Fibonacci and see where it's going to bounce at strong or it's going to turn around and reverse, that you'll know, hey, I need to either move it all the way up and take everything, or just keep inching my take profit up, or my stop loss up. Okay, so in all actuality, I put this in the wrong place. Right here, I would have erased my take profit right here, and then I would have moved my stop loss up 6,300.
Right. So you can move your stop loss to the pips that you already got.
Right. So I can cover everything that I already have. Right. That way, if it comes around on me, at least I got the 630 pips.
You already made. All right. Right.
Yeah. Okay. Yeah. So at least if it turns around on me, that's okay, because I was only shooting for 75, and I got 630 out of that 75 at whatever the risk management amount that I had put in it anyway. Now, another thing that you can do when you see the trade has activated and that thing is running strong, wait for a pullback. Okay, if it's going to have some pullbacks, it pull back to here, right here, right? Let me erase this one. Hold on one second. It did the trade activated. She activated and she came back here and she pulled back. When she pulled back here, I would have got in for a market execution on top of the trade that was already running for the sell limit. I would have gotten a market execution sell at a higher lot size, and I would have rode that thing down and kept riding it down. And every time it pulled back, as long as it was continuing to go down, I would have got in for another market execution sell at a higher lot size. So you can, as this thing is going down with the original, you can double and triple and quadruple dip the chip and make more money going all the way down till it exhausts itself, either on your if you had a fib line here or a previous support level here, you could have let it exhaust itself all the way down there and got out. Or you could have got out when she got down here with this fib level.
So those other lines, the analysis that's behind the actual candles, that's the web analyzer, right?
What are you talking about?
The thinner lines, the thinner wavy lines. You got one that's red.
Those are moving averages.
Those are
These
what?
lines here, moving average.
Okay.
Yeah, so I put my moving averages on, and I'll go into what moving averages I'll use later on. But even if you don't have the moving averages, my moving averages help me to see certain things at different times and know which way it's actually going.
Hey, Oscar. Don't get confused, okay? Yes, the web analyzer uses those same moving averages and Bollinger Bands, but the web analyzer uses other indicators that are programmed in the background that you can't see to alert you to those trades. But this is his strategy. These are just some of the tools, some of the indicators that he used. So you'll see multiple tools that use the same indicators, but they still have their own separate strategies.
I got you. Okay.
Yeah, like I use the TDI. If you see down here, and if you look, can y'all see the bottom of my screen?
Yes.
All right, you see this TDI? You see this green right here? This green is the actual candlesticks. And when it comes up here and it does a peak, I know it's about to drop. When it peaks like this, I know it's getting ready to sell. And also by the fact that it's outside of this little thin green line, which is the top of my Bollinger Band. So I know she's getting ready to turn around right here. When she gives me a peak here, I'll get out, and then I'll be looking for a sell. And when it crosses over my red, and it comes back and it touches again and crosses real hard, I know I'm selling. If she continues past my yellow line right here, I know she's definitely hardcore in a sell. And as you look and see right here, when it came down, it did a hard turn right here. She started buying. And if you look, hold on a second. Let me grab one of these. This is something I'll show you all later, later on. But if you look right here, and I'm gonna grab another one. And I'm gonna just lay it on top of that line. If you look right there where it did this hard peak right here and started to come up right here, she was buying. If you look right here, that's that peak right there, and then she started buying. It follows. So you can literally sit on one pair. This is a different subject altogether. You can literally sit on one pair and trade it all day if you needed to. But as far as teacups are concerned, these are sell limits. Right here, I see a bullish followed by a bearish leaving the zone. Right here, I'm gonna grab another one. You see this bullish followed by the bearish. They left the zone. Let me try to get my placement right. Right. Bullish followed by bearish, leaving the zone. Well, it came back here, put me in the trade, came down here. I could have got out here, but I'm probably gonna go and see what if she's gonna come further down. And the way this is going right here, does like this, and she's up under my red, and she's pointing down real hard, lets me know that this thing here is going to continue going down. Right here, it's going to continue going down. And I'm going to get all of the pips that I need to get out of that. Right off this line right here. Y'all see that?
Yeah. And you say the tool at the bottom is called what again?
The what? TDI.
TDI.
Any questions, anybody? I mean, we'll go over this and you know, and the next time we get on a webinar next Tuesday, you know, if you got any questions or concerns, you know, feel free to hit me up on Facebook, you know, send something out in the Elite Fortune group, hit me up on Facebook, send me a message, hit me up, you know, I'm easy to contact.
Okay.
You know, anybody want to take my number down? You know, my number is 410-905-9237. You know, shoot me a message, send me a text. It's probably easy to get me text wise. But if I miss the phone call because I'm doing something like this, you know, I might not be able to respond to you. But if you send me a text, I can get right back to you, you know, as soon as I'm clear.
Great. Hey, Keith, we definitely appreciate you doing this. Don't forget, guys, every Tuesday, Keith will be on doing the TEACUP strategy. So make sure that you guys tune in. I will have this posted to YouTube, hopefully within the next hour. So stay on the lookout for that. You can always go back to resharpen your skills of what you learned today, to rewatch that. So I would definitely advise you of doing that. But if there's no more questions for Keith, we'll go ahead and wrap this up. Are there any more questions? Anybody?
No, sir.
All right, Keith, we appreciate it, man. Let's get these pips, and we'll see you next
Let's get it, y'all.
Right,
I'll talk to y'all soon. It's been a pleasure. Have a great night.
You too, man. Appreciate it.
Absolutely. Peace.